so much for joining us today. It is, of course, the fourth day of the year. It's a Wednesday, and I hope you're having yourselves a wonderful day so far. This is Financial Markets, where we drive you into the business of the different investments in the financial markets here in Africa as well as across the globe. My name is Anthony, and I am your host. Remember to catch me live every morning at 10 a.m. and, of course, later on at 10 p.m. you'll catch the repeat. And of course, we get you through what the day has been and where, of course, we expect more gains for the day, and perhaps where you probably might not have witnessed the opportunities. We get to support them for you. These, of course, are markets that are quite interesting. We have, of course, the stock market. We do have the bond market, and a couple of other diversified products that we would like to get into as well later on as we progress in this show. The show is proudly brought to you by Altex East Africa, your number one private stock exchange. And according to, of course, Altex East Africa, right now you can buy or sell treasury bonds across East Africa with a simple dial on your phone. That is simply by dialing *292#. When you do so, you will definitely be able to open an account or register, and you will be able to transfer funds from your mobile money on MTN to the Altex East Africa Stock Exchange. You can start with as little as 15,000 Ugandan shillings to start with. Of course, your investments might, of course, take some time to accumulate more money, because, of course, what we're going through currently in the current economic tides is not an easy time, but at Altex we say you can do something new, and we give you a chance to explore the markets at the best interest rates or the best returns that you can find on the market. We buy bonds across East Africa in Kenya, Uganda, and Tanzania as well. We do also have an exchange traded fund on the best bonds in the East African market. Altex East Africa is a well-regulated body by the Capital Markets Authority of Uganda, and definitely licensed to carry out whatever operations it does carry out. And the markets open at exactly 15 minutes past 8 a.m. and close at exactly 15 minutes past the hour of 3 p.m. East African Standard Time. Now, we are going to start off with the US stock market, of course, being the third day of trading today. According to, of course, data from yesterday, we are looking at shares of Tesla that are picking up right where they left off in 2022. The shares of the EV or electric vehicle maker tanked more than 6% at the market open on Tuesday. And with investors reacting a lackluster fourth quarter delivery figure released on New Year's Day, Tesla was the top trending ticker on the Yahoo Finance platform, as per, of course, the platform data here. Tesla saw the fourth quarter deliveries rise 18% sequentially to about 405,000, missing consensus forecasts of over 418,000. And the figure brought Tesla's 2022 total deliveries to 1.3 million units, up by about 40% year over year, but below the company's guidance of 40 or 50% as well. The delivery miss only fueled further concern on the street on the demand of Tesla's vehicles, a key factor in sending shares spiraling 65% lower in 2022. Now, JP Morgan analyst Mr. Ryan Brinkman cut his profit estimates and price targets on Tesla, of course, in the wake of soft results that were witnessed as per the release of the data there on the New Year's Day. Brinkman sees, of course, Tesla missing their fourth quarter earnings estimated at about 1.19 US dollars when it reports later in January, For 2023, Brinkman also says it is now modeling for an earning of about 4.6 US dollars per share, and that is down from 4.84 rather US dollars per share previously. The analyst price target moved down to 125 US dollars from 150 US dollars, and also he continues to rate the stock underweight, that is the sell equivalent, and beyond the impact to near-term financials. Another implication we see from the fourth quarter's combination of softer than consensus volume and pricing is the impact on the stock's growth narrative, which has allowed many investors to believe that the company is actually likely to grow unit by unit volume at an upward 50% plus or minus, that is on the compound annual growth rate. Until such time, it is the world's largest automaker, and the management outlook of this is for over a multi-year horizon, and we expect to achieve about 50% average annual growth in vehicle deliveries. And of course, there's a question, of course, on Tesla's progress currently. Looking at the stocks that have been tanking in 2022, will they pick up this year? We might not know, but very soon we shall realize, at least by the end of the first quarter of 2023, probably where all this is headed. Yesterday, Tesla lost about 10.8% after the markets opened from the 3 days break. That is since New Year's Eve, currently counting about 10.5% losses there. Now, generally speaking, on the US market, the US stocks fell on average. A very negative sign, at least for the start. And of course, given a very bad 2022, some of the worst performances, especially from the indexes like the S&P 500, which is one of the benchmark indexes there of the US stock markets. We're seeing that these declined by close to 0.6%, and currently we are still looking at losses being registered in the first day of trading in the year 2023. Now, the US stocks stand out lower Tuesday morning, especially as a busy first week day of trading of 2023 got underway. The S&P, which is a Standards & Poor's, of course, tracking top 500 American companies, lost about 0.5% after opening higher, while the Dow Jones Industrial Average declined about 0.4% in Tuesday morning trading, and the technology-heavy Nasdaq Composite also fell about 0.7%. The moves early Tuesday came after broad-based declines on Friday in a fitting end to Wall Street's worst year of trading since the global financial crisis in 2008. The year 2022, was the worst year for stock markets globally, and especially in the US, since the financial crisis of 2008. That's very, very powerful there. Now, the US stock and bond market were closed on Monday in observance of New Year's Day. And according to, of course, when they opened later yesterday on Tuesday, the S&P 500 tumbled significantly there by 0.6%. But let's get to look back to 2022. In 2022, the S&P 500 lost over 19.4% from their year-to-date performance, while the Nasdaq Composite, which tracks tech stocks, which by the way suffered most in this period, declined or wiped out 1/3 of its value. This is dropping 33%. Very, very significant fall there, closing out with its first fourth quarter decline since 2000.4 dot-com bubble. The Dow fell a comparably modest 9%, so it was a little bit slightly affected compared to the S&P 500 and the Nasdaq Composite, and this is holding up better than many of its other peers or index peers, but still capping a 3-year winning streak for the major averages. Optimism around China's recovery after researchers in Shanghai reported that the COVID cases in major Chinese cities may be peaking, and of course this helped boost the sentiment early Tuesday morning. Shares of Chinese companies trading on the US exchanges pushed forward, with Alibaba Group, the BABA or Baba Group, and the Baidu or BIDU rising each by at least 5%. The block's SQ stocks rose about 2% following an upgrade from buy analysts to outperform, and with a nice new price target of about $78 per share, up from the prior $62. Tesla remained in the limelight to start the year after the electric car maker on Monday reported record production and deliveries of vehicles in the fourth quarter, but still missed Wall Street's estimates. Shares of Tesla plunged nearly 10% on Tuesday. The company closed out its worst year on record in 2022, shedding about 65% or about $700 billion in market value. In December, growing concerns around production delays in China and the CEO Elon Musk's management of Twitter drove the stocks down by over 36%. We're talking about Tesla here, and this was the biggest monthly drop since Tesla went public in 2010. In other markets, early Tuesday, the US Treasury yields retreated, and in 2022, the yield on the benchmark 10-year Treasury note surged from around 1.5% at the beginning of the year to settle at 3.88% on Friday. Oil prices slumped, with the West Texas Intermediate crude futures falling 1.7% to trade just below $79 per barrel. And meanwhile, the US dollar index gained Tuesday morning. A new year may not be a fresh start for investors, seemingly, as we can see data here on the market. Losses on the tech stocks, losses on the big indexes like the S&P 500, but also with strategists warning that many of the headwinds that plunged the markets in 2022 might persist in the new year. There's no hope yet in sight for the better performance of stocks globally, but as well as on the US market. Inflation continued, of course, monetary tightening by the Federal Reserve Bank, and the risk of hard landings as future rates hikes permeate the US economy. There is still a lot of worry in the hearts of investors. Remember last year, due to inflation, the central bank rate of the United States was increased by 75 basis points on 4 occasions in last year's trading. The story in 2022 was the Fed hiking interest rates, of course, choking off the equities and the bond markets, and by indication, a bunch of other markets in the process as well. According to Opima CEO, Mr. Octavio Marenzi, he told some reporters on Friday, adding that market expectations for a terminal rate of 5% were mindlessly optimistic. He says also that he doesn't think that the peak interest rate is only 75 basis points away if you look at where inflation is currently. He also says that he thinks that there is more pain to come in 2023, and he basically thinks that we are going to go to see a replay of 2022 in 2023 with the same kind of pressures in the same direction. Now, economics data will pick up in the shortened first trading week of the year, according to Mr. Octavio, with the Labour Department set to release its first jobs report of 2023 Friday morning. Economists expect about a payroll gain of 200,000 jobs for December, as per Bloomberg consensus estimates. Investors will get 3 traditional updates on the labor market, with the latest job opening and labor turnover survey at about, and the ADP's private payrolls data and the Challenger job cuts or reports all due to be out. Investors will also tune in for the Fed's release of the minutes from its December policy meeting, which investors will pour, of course, over for clues on the central bank's next move. That's basically what we have for you from the US stocks. Currently, when you look at the futures, the indexes here at the US stocks, the S&P 500 is about 3,815 points, and the Dow Jones Industrial Average about 32,995, whereas the Nasdaq Composite is about 10,373.32, and that is, of course, from the US stock markets there for you. Remember, trading really happens all over the world, and if you are to become one of the best investors in the land, you definitely must consider diversification. So if you consider investing in the US market or any other markets across the globe, definitely you can do so in 2023. But like I see, 2022 was a very good year for the US stocks, generally speaking. That's in general. Of course, there was some few deviations here and there where actually there were people that performed pretty much better, especially looking at the Dow. The Dow Jones Industrial Average, which is a tracker of the top 30 stocks on the US stock exchange, actually did perform much better, but still losing at the end of the year when you look at the year-to-date figures there. But the S&P 500 had a very bad year with over 19.4% that was lost. And then you're looking at also when you look at the current Nasdaq Composite, it was immensely affected because you're looking at a company that did begin the year, and tech stocks were on top of any other stocks on the US market. But as we progressed, Elon Musk taking over Twitter, very many jobs being lost there, the stocks plunged, and closing the year, the US tech stocks had their worst performance since the financial crisis in 2008. Of course, that marks a very, very poor performance for the year. But of course, we hope on, and we hope we shall get along this year, and definitely get to keep your fingers crossed, and get to still check out more on the jobs data reports that are about to be released. Get to check out some of the figures on the inflation, and of course the minutes of the policy committee meeting of the Federal Reserve Bank. Those definitely will give us a picture on what could be the next move, especially of the central bank there of the United States, which is the Federal Reserve Bank. Now, of course, trading has resumed on the African continent as well, though unfortunately we don't have data yet, for example, from the Uganda Stock Exchange. We're still relying on, of course, the Uganda Stock Exchange to give us this data, but they haven't released this data for yesterday's trades. I don't know when they will do this, but probably they will start today releasing this data so we can analyze the performance of stocks in 2023. Otherwise, yesterday should have been, and should actually was the first day of the of trading on the Uganda Securities Exchange. The markets were open for the first day in 2023, but the data is not yet available. But we can just still get to look at, for example, the Nairobi Securities Exchange here for you, and look at the end of their trading here for January 3rd. That was yesterday on Tuesday. Now, according to this data, we had 45 companies participating in trading at the Nairobi Securities Exchange. And amongst these, the day ended with 19 gains coming on top of the gaining list and 18 losers at the bottom. TransCentury led the gainers with a 6.45% share price appreciation, closing at 0.99 Kenyan shillings per share. And Home Africa as well, 6.25% share price appreciation came on top of the gainers there. And Nairobi Business Ventures with a 4.51% gain. And when you look at Ever Ready East Africa, they gained about 4.35% as well. Let's get to look at TransCentury stocks here for the year 2023 and get to see what we should be looking at. Now, we are talking about a company based in Kenya and is engaged in three very, very important sectors. There's power, transport infrastructure, and engineering services as well across Africa. The company is focusing on activities on three divisions, mainly power, transport, and engineering, with the power infrastructure division manufacturing electrical cables and transmission equipment in Eastern, Central, and Southern Africa. And the engineering division, of course, focusing on mechanical and civil engineering and contracting firms across East Africa as well. In April 2014, TransCentury started, of course, a journey of course, getting to announce its subsidiary Safari Rail Company Limited, which sold its entire stake, equaling to 34% in Rift Valley Railways, and this was RVR operations project. Now, the company currently has about 371 million Kenyan shillings worth of market capitalization, ranking this company as the 51st most valuable out of the 65 companies that are listed on Nairobi Stock Exchange. This represents about 0.019% of the Nairobi Stock Exchange equities market. Now, when you look at TransCentury stock here, they gained about 0.06 on their first day of trading in 2023 and moved up to 0.99 Kenyan shillings, which was a 6.45% gain. Looking at the turnover for the day, they traded about 8,700 shares that yielded about 8,620 Kenyan shillings for the day. Their earnings per share currently are in negatives at a 10.61 kind of a loss, and a price to earnings ratio of 0.09. They do have 375 million shares that are floated on the exchange. Of course, their market capitalization being maintained at 371 million. Now, the company's last day of trading yesterday, it closed at 0.99 Kenyan shillings, and this was a record of 6.5% gain for the company that closed, that of course began the year with a price of 0.93 Kenyan shillings and has since then gained 6.45%, ranking it the first on year to date. Of course, it's just a single day of trading, but we can still count the year to date performance here at the Nairobi Stock Exchange. When you look at the shareholders' point of view, you might be optimistic because the company has also accrued about 10% on its 4 weeks performance. So in the entire month of December, the shareholders have actually gotten about 4%, 10% rather, on their value. Now, in terms of trading, the company is the 7th most traded on stock. We're talking about TransCentury East Africa, power engineering company and infrastructure company that is based in Eastern and Central as well as South Africa. Within the last 3 months, from the 29th of September to the 3rd of January 2022-2023 respectively, the company has recorded about 21.6 million shares, and these are in about 479 deals, valued at exactly about 17.6 million Kenyan shillings over the period. They have had an average of about 342,000 shares on average traded per single day of trading, making the company pretty attractive. And I think this could be a stock I would consider for 2023. Beginning on a very good note, coming in the first place year to date. Yes, I think we can start there and get to see how we can move forward coming into the first quarter of the year 2023. But of course, Plan Century, of course, noted to be noted, is the top company in terms of gaining on the first day of trading at Nairobi. Home Africa came in the second place, and Home Africa is the only publicly traded property developer that is listed on the Nairobi Stock Exchange. Now, Home Africa plans, of course, to extend to various parts of Africa its services in development of properties, that is real estate and housing and so on. It has so far, of course, extended it to Rwanda, Tanzania, Angola, Zimbabwe, and Nigeria, as well as Ghana. But currently on the Nairobi Stock Exchange, this is the 59th most valuable stock, and currently counting a market capitalization of over 138 million shares, 138 million Kenyan shillings that are being of the shares that are being floated on the exchange. This represents about 0.007% of the entire Nairobi Securities Exchange equities market. The company yesterday appreciated about 0.02 Kenyan shillings to come to 0.34 Kenyan shillings on the market, which was a 6.25% gain on their price. They did have a volume of about 13,700 shares, yielding a turnover of over 4,634 Kenyan shillings. The shares outstanding are currently at 405 million shares, bringing the value to the 138 million Kenyan shillings market capitalization. Now, when you look at how the company began the year with a price of 0.32 and since then has gained about 6.25%, this is the second best performer on year to date. Year to date, of course, here we're talking about a single day because the year has just begun. But Home Africa looks to be starting in high gear the year 2023. Investors should, however, be, of course, cautious because Home Africa has recorded a recent bad performance, having lost about 8% in the last 4 weeks of the month of December, mainly. However, Home Africa, of course, is the 15th most valuable, most traded on stock on the Nairobi Stock Exchange over the past 3 months, from the 29th of September to the 3rd of January 2023. The company has traded at about 4.55 million shares in about 896 deals that are valued at 1.56 million Kenyan shillings currently over the period, with an average of about 72,179 traded shares per session. Now, on the losing side, Liberty Kenya Holdings came out last, unfortunately, with a 10% loss, down to 5.04 Kenyan shillings per share, and Uchumi Supermarket as well losing about 8.7%. And when you look at Scan Group as well, it lost about 4.65% of value. Safaricom recorded the biggest volume for the day with about 575,900 traded shares, followed by Kenya Power and Lighting Company with about 214,400 shares. Cooperative Bank of Kenya at 149,800 shares as well, came in as the top mover, and Absa Bank Kenya with about 134,300 100 shares as well. Regarding the performance of the NSE market indexes, the NSE All Share Index paired about 0.13 points, which was a 0.1% points loss, or closing to about 127.34 points. That is a 1-week loss of about 0.59% and a 4-week gain of 0.68%. But an overall year-to-date loss of currently about 0.1% has also been registered. The other remarkable indices like the NSE 20 and the NSE 25 also performed differently, with the NSE 20 losing 0.04% in the first day and the NSE 25 gaining 0.15%. And that's it from the Nairobi Stock Exchange. Uganda Stock Exchange has not released data yet, so we're not going to be getting into that trading, but hopefully at the end of today we shall have that data, and definitely Smart24 TV will definitely give you that data as it is supposed to be given to you, and you will be able to make decisions based off a very informed point of view. My name is Anthony, and thank you for watching Financial Markets. We are going, of course, to get to break off, but we shall meet tomorrow, same time, same place. Remember to follow us on Twitter at Smart24 TV, and my personal Twitter handle is at Anthony Sebale. You can just get to Twitter and get to click a few things, and you can follow me and get the latest data concerning financial markets. I'm very glad you joined us, and thank you so much for staying tuned. You can, of course, look ahead for more programming with Yuji Tukole and Jen Koleda and a couple of other business shows that you do not want to miss on. This is Smart24 TV, and we drive your business.